What's going on, guys? It's Luke here. Today I wanted to make a new type of video where I go over a trade review. So this was a setup that I seen form, I think it was on, this was on Friday. I talked about it briefly in my last trade recap because I actually missed this setup, but going back and looking, I feel like there's a lot of working parts into this trade and a lot of things that you can actually learn and take away from this specific setup. And I'm going to get into why it was such a high probability setup looking back on it. So once in a while, I want to start doing trade reviews like this and just talk about some potential scenarios and some setups that you could have caught, and then hopefully you guys can take some lessons away from that. If you guys are interested, join the free Discord where we talk live trading, my commentary throughout the whole trading day, analysis, all that stuff for free. This was the trade right here. I just didn't get the entry. I'm going to get into it specifically, but this is in real time, me updating everyone in the Discord saying basically what I'm looking at. And the Discord is just going to keep growing. We're going to get into some live trading and all sorts of stuff like that soon. And if you guys want access to the premium vaulted videos, which I'm constantly uploading in there, more in-depth videos, which are only available to the premium role, join the Discord and DM me and show me proof that you're subscribed on YouTube and follow me on TikTok, and I'll let you guys in there. And that's in like ever-growing library of in-depth videos I'm going to keep adding in there just for the premium members of that Discord. Again, just send me those screenshots and I'll let you guys in for free right now. So not going to be free forever, but I'll let you guys in for now for being early supporters. So let's get into this one. So let's start off on the higher time frame. This one shouldn't really take that long, but there's definitely a lot of lessons that you could take away from this trade, right? So starting off at the beginning of the session, let's put the replay tool back really quick. Okay, so price already moved down aggressively to the downside, and in the pre-market we had already swept out Asia lows, we had already swept out London lows. The 9 a.m. candle comes down and continues to flood down, and from here we end up getting a sweep of daily lows right here. So we have this red candle followed by this green candle, which is our daily low. And then we end up sweeping out this daily low as well. I can't remember if it was a weekly low, actually. Yeah, we had actually a sweep of a weekly low and this daily low. So regardless, we take out higher time frame sell side liquidity. And we are pretty much can assume that potentially price might want a relief bounce off of this level. But regardless of just sweeping out that draw on liquidity, we also, if you go back to the 4 hour, what you're going to see here is an old 4 hour bullish fair value gap right here. So this has not, it's been tapped into, but it hasn't been broken below. So with these 4 hour gaps, with these first presented fair value gaps, this is going to be the first gap that's presented on a big leg, right? So what these are is they're usually going to be the strongest gaps for price to reverse off of. So this is the way I always look at these first presented gaps. If price comes down and holds this gap and we get a lower time frame confirmation, we're likely going to be able to catch some type of relief bounce or potential reversal area. But if this gap ends up flipping and we get a retest, then that's showing that the bulls basically are completely out of strength and the bears are just taking over, and price is likely just going to flood to the downside. So you really have to pay attention to these first presented gaps on every time frame. You have them on every time frame. Price is the same thing across all the time frames, right? So from here, what do? We look basically to look for a lower time frame entry. And what I had marked out, so I start my analysis for entries on the 15. So from the 15-minute chart, let's put this back right here. We have this 15-minute bearish fair value gap marked out right here. So this is going to be an area of potential like resistance in quotes, right, where price could potentially react off of. So we're going to have to be safe and try to look for take profit into this gap, right? Then we go down to the 5-minute, and if we put this back, we really don't have an entry model unless you're trying to like bottom tick or something like that. I'm looking for confirmation. So I'm going to the 5-minute and I don't really see anything. I like to enter off of an inverted fair value gap or something like that. So from here, we're going to scroll down to the 4-minute chart, and then we don't really see anything here. So then we go down to the 3-minute. We really don't see anything there. And then finally on the 2-minute is where we start seeing some potential entries. So on the 2-minute, we have this bearish fair value gap. And finally right here, we end up getting a strong close above it, inversing this bearish fair value gap. So the order flow on the 2-minute chart now is flipping from bearish to bullish. And For me personally, on this setup, I wanted to see a retrace, and that's exactly what I posted in the Discord. I said I wanted to see the retrace into potentially CE of this gap. Where's my tool really quick? I wanted to see price. Oh, we're in the, that's why. I wanted to see price come in, maybe respect CE, and then continue to take a trade into there. But if you don't care about that, you just take the inverted fair value gap. You could have put your stops below these 1 minute lows, or you could have put it below the swing low. But in terms of risk reward, obviously this would have been a bit better. So from here, you say, okay, we swept out a daily low. We swept out a weekly low. We are respecting a 4-hour first presented fair value gap, which is the strongest leg in the strongest gap in the price leg. Because if this leg breaks and we inverse this gap, then price is going to literally fall, all the way down. But if it holds, we should be able to catch a relief bounce. We go to the hourly, there's really not much to say on the hourly. Then we go to the 15. We have this 15-minute bearish fair value gap, which we're going to look to trade into. Then we're scaling to entries. So we don't really see anything on any of these entries until we work our way to the 2-minute. We finally enter off of this 2-minute inverted fair value gap right here, which again, you can take the breakout. I didn't get an entry because I was looking for the retest. But let's say you take your entry right there. And what are you going to target? Well, again, since you're pulling into this 15-minute, you really want to be looking to kind of aggressively manage the trade as price starts pushing into this gap. And I know that's not the greatest risk reward, but you really have to think about it like fair value gaps getting respected. It could easily just come like this. So you really have to be willing to aggressively manage this trade at this point. And the second option, honestly, and what I was looking for in this trade is targeting CE of the gap, which is the midpoint of the gap. So if I pull from here to here, you mark out the midpoint, it's going to be right there. So a lot of the times, price is obviously going to pull into a fair value gap and respect the 50%, which is the CE of the gap, and then it's going to reverse from there. And what you'll notice sometimes is price will actually tap into a gap, and people will think it's going short, and then whatever, they'll get in the shorts here, and then price will manipulate back into CE and then continue to fall or something like that. So for me, I always like targeting CE of gaps, and this would have been like, if I press forward, you would have hit that pretty quick, right? And then secondly, as your second and final take profit, you could target the end of the 15-minute fair value gap, which ends up getting tagged. I think you would have almost gotten stopped out break even. And then it would have ran, and I think it ends up hitting eventually. Let me just see there. Yeah, so it would have just tagged it right there, but you almost would have got stopped out break even. But, this would have been a really great trade. And if you held this to the end of the fair value gap, you would have had a 2.74R trade if you had your stop loss tight there. So working parts again, let's start from the top. We swept out, price sweeps out a weekly and a daily low. From there, we're holding in a 4-hour first presented gap, which is the strongest leg in terms of bullish price action. Again, if this gap fails, the bears are taking over. Like, it's as simple as that, right? Then we scale down to our entries. We have that 15-minute gap as an area of resistance that we have to be careful of. So we have to aggressively manage before price gets into that gap. We finally find an entry on the 2-minute where we enter off of this 2-minute inverted fair value gap. We put our stops below here. We aggressively manage as price gets into the 15-minute gap. Don't have to take profits yet, but you could just start aggressively managing your position. Then you could do take profit 1 at the CE of the gap, lock your stop loss and at break even, and then take profit and final take profit at the end of the 15-minute fair value gap, because price sometimes, like I said, will do internally manipulate within a fair value gap. And then from there, as you can see, price continue to hold that gap, and then it would have sent price right back down. So yeah, that's pretty much it for this trade review, guys. Just an entry I wish I got into. Again, I was just looking for the retest, but that's going to depend on what kind of trader you are. Sometimes people will take the retest. Some will just take the breakout of the inverse. I wish I took it because it would have been a great trade. And yeah, so I hope you guys enjoy these trade reviews. I'm going to do more of these as soon as I see setups that potentially I didn't take, talk about why I didn't take them, and then just the important lessons that could have been learned from that trade. But that's going to wrap it up for me, guys. Hope you guys enjoyed this one. Until the next one, give me a like, subscribe, comment on the video, follow me on all my socials, check out the Discord free link in the description. If you guys are interested in the mentorship, check the link in the description. That's going to wrap it up for me, though. I'll see you guys in the next one. Peace.